Let's be real for a second. With literally millions of crypto tokens out there, most of them feel, well, kind of useless, right? But what if a token's value wasn't just based on social media hype, but on the actual, real-world profits of a business? Today, we're going to dig into a project that claims it's cracked that code, tying its value to something you can actually track.
So here's the plan. We'll start with the useless token problem that, honestly, we all think about. Then we'll look at a different approach, a token backed by Bitcoin mining, and see how this value machine is supposed to work. After that, we're putting the claims to the test with real data. And finally, we'll ask the big question, is this what the future of tokens looks like?
You know, even if you're deep in the crypto world, the sheer number of projects out there can be a lot. And frankly, it's a bit of a red flag.
Yeah, when you see a number like 30 million, you have to stop and ask, what do all these things do? And the tough answer is, for most of them, not much. They really only exist for one reason: speculation.
It's a familiar story. A token is created, it gets a ton of hype, the price pumps, and early insiders cash out. It's exactly why we see so many altcoins just crash and burn, leaving a lot of people wondering what the point of it all is beyond just gambling. It's no wonder people are starting to look for tokens that are tied to something, real.
And that brings us right to the core idea we're exploring today. What if a token wasn't just built on hope and tweets, but was directly backed by a profitable, real-world business? Something like, say, Bitcoin mining.
This is the fundamental promise of a project called EverValue Coin, or EVA for short. The whole idea is that it's a token engineered from the ground up to consistently and provably grow in value against Bitcoin itself, every single day.
The easiest way to think about it is like a high-yield savings account, but for your Bitcoin. Instead of a bank paying you interest, the yield comes from the profits of a Bitcoin mining farm. All you do is hold the token, and it's designed to become more and more Bitcoin over time.
Okay, so how does this value machine actually work? What are the nuts and bolts? Well, the mechanics are surprisingly simple, and honestly, that's one of the most appealing things about it.
Is this simple four-step loop. Step 1, a real mining operation mines new Bitcoin. Step 2, those profits get deposited every day into a public, on-chain treasury, the Burnvault. Step 3, since every EVA token is just a slice of that growing pie, its underlying value goes up with every single deposit. And finally, step 4, if you want out, you just burn your EVA tokens and redeem your share of the Bitcoin. Simple as that.
Now, here is the absolute key to the whole thing. The amount of Bitcoin in the vault is always going up. But the supply of EVA tokens is fixed. It can never go above 21 million. In fact, it only goes down when people redeem. So basic math tells you that the amount of Bitcoin backing each and every token has to rise over time.
Okay, that is a very bold claim. A token that's basically guaranteed to appreciate against Bitcoin? In the crypto space, we have a saying, don't trust, verify. So let's do exactly that. Let's see if we can verify these claims with public, on-chain data. First things first. Is the money really there? Well, a quick look on the blockchain says yes. The project's public vault is sitting on over 143 Bitcoin right now. And the best part? It's all transparent. Anyone, you, me, anyone, can go look at the contract and see it for themselves.
Next question, is it secure? I mean, that's a lot of Bitcoin. Well, the core smart contract was audited by Hacken, a pretty well-respected security firm. And the score was fantastic, 9.6 out of 10. And look at the details, perfect 10s for security and documentation, the two areas you really care about.
And this right here, this is the single most important sentence from that entire audit. It means the code makes it literally impossible for anyone, including the team, to just take the Bitcoin out of the vault. The only way Bitcoin comes out is if a user burns their EVA tokens. The funds are programmatically locked to the holders. No rug pulls possible.
So the money's there, it's secure. But does it actually work like they say it does? Well, if you price EVA not in dollars but in Bitcoin, the picture is crystal clear. It looks like a staircase, a steady, predictable upward climb against Bitcoin with every daily deposit. The system is doing exactly what it was designed to do.
Okay, so we've verified the whole mechanism, and it checks out. But there's another, much more interesting layer to how you should think about this token's value. It goes beyond just the Bitcoin that's sitting in the vault right now.
You see, EVA's value really has two components. The first part is its burn value. That's the floor price, the actual amount of Bitcoin you could cash out for today. But then there's the second part, its future value, and that's the market's belief in all the Bitcoin that will be deposited tomorrow, and the next day, and the day after that.
And this creates a really fascinating choice for the holder.
If you burn your EVA today, sure, you get your Bitcoin now, but you give up your claim on all of those future profits. As this project keeps delivering day in and day out, you have to imagine the market will start pricing in that future reliability. The token could actually start trading at a premium to what it's worth today.
So let's zoom out for a second, because this whole model fits into a much bigger story that's unfolding in crypto. This idea of tying a token to real, provable cash flow, well, it's not happening in a vacuum. EVA is part of this really cool emerging trend that people are calling real yield. These are projects that generate returns from stuff we can all understand, not just from hype cycles. You see it with Ondo, which backs its token with the yield from boring old US Treasury bills. You see it with Coinbase's liquid staking token, which gets its yield from securing the Ethereum network. EVA is just applying that very same logic to the world's oldest crypto business, Bitcoin mining.
And all of this brings us to a really fascinating question about where this industry is headed. As crypto grows up, where is the value going to end up? Is it going to be with the tokens that have the best memes and the most Twitter hype? Or is it going to be with the projects that have transparent, verifiable, and sustainable business models? If you look at projects like EVA, it seems like the smart money might be betting on the business models.